All right, let's jump into things. Where we at? 9:39 on the 9th of April. We got the Wednesday morning session just sort of slowly ticking off and that at the moment. We got gold making an early move a little bit lower, so that's just where I'm going to sort of start. Excuse me, check it onto a smaller time frame. We can see this nice little, this is a very typical sort of gold move. Generally with these things, we want to see this candle minimum, and this is on, I mean, 9:30, it's still a little bit early. I mean, you're not getting proper volumes in, but remember, some of the craziest moves we've seen in gold have been in Asia sessions. And I think sort of like I always sort of reference this point. I think it was December 23, where it ran $50 in like 15 minutes, which at the time, let's also always do this sort of thing, but if you go way, way, way back, where are we at? That's how far back we have to go with these sort of things. I'm pretty sure this is the one that we're talking about. This was the move which started this trend, actually, sort of interestingly enough. Excuse me. So the spike on that candle for that day, this big one here, 3.6%. $76, and then obviously boom, capitulation sort of sold down afterwards with it all. But the point is, it's sort of look, these big moves can happen in Asia session, and that one they snuck in at 9:30 as well, because I remember trading and thinking, what the hell's going on here? So if we were to say, and this is more just really a little bit of fun and games than um, what was it, 3.7 or something, wasn't it? Something about that. Now, I'm not saying that this is going to happen. I'm just, as I said, this is more merely just a little bit of fun and games to sort of see how big that move was in, if that were to be in obviously the opposite direction, but, as of this morning, that would sort of see a massive dump close to $100 in that, because you got to remember this, you go off the percentage amounts, not the buck amount, because, you know, we're trading up around 3,000. Back then it was around 2,000. So things are going to be a little bit bigger, of course. But, that's just it. Again, look, I keep sort of saying this is just a little bit of fun and games. Look, I'm short gold. So if this drops down here, bang, man, I'm done. That's fine. I'll clock off. But look, I don't think that's going to be something we're going to see. But just a little bit of fun to sort of see it. Anyway, whatever. Back on with the charts. Let's have a look at where we're at. So let's drag this fib down. You can see that sort of like, this is a third solid push down to this level here. I was thinking about that you really want to see this continue down today because, we had a whole bunch of stuff happening overnight. We've got the Yuan, who's they've sort of let it go a little bit. That's sort of broken through some sort of very strong sort of resistance levels. You're seeing this sort of escalation at the moment of this sort of trade sort of stuff going on. I think that is what's sort of helping, you know, gold sort of stay a little bit sort of like obviously it's getting sold into and that, but a little bit buoyed. So let's just put a little zone in here. And you can see that this is kind of turning into a bit of a crucial area that you want to see them at least close underneath. Zone. So obviously we tipped back down into these previous highs, which gave us that big bounce up there yesterday. Yesterday was a pretty cruisy kind of session in that. It sort of flirted around that sort of like 3,000, but really underside of this big zone here, which is what we were sort of talking about the other day. It's obviously rejected from here. You can see a couple of hits here over here, and then bang, came down here early. So where we're at the moment is you want to see for downside, I would like to see a big candle to really sort of thump this level today. I'd like to sort of see it really sort of take out this wick at 56 and really sort of show that we're going for another leg down, because if it holds at this level here, you could be turning into some sort of like higher kind of little range area through here. This is the not the fear, but it's like, considering both sides of the equation. You've tried to go one, you've tried to go two, tried to go three attempts to get down, buyers, buyers, buyers holding it. Eventually, this thing's going to sort of test what's on the other side of this range. It'll turn this into a range, and it'll try and go, okay, what happens if we, a lot of the market's trying to short this thing. What if we try and squeeze it up this way? And this could result in, a little bit of a squeeze back up to sort of like, 3080s or something like this. Maybe test some of these underside levels over here, maybe the 50 to 61% retracements of these levels. So I think sort of today's kind of in the short term, the crucial point. What you want to sort of see, or I'm sort of short, I want to see a big drive down, maybe a little thing, and then some sort of move down towards that sort of 2900 target. What, as I said, if it sort of holds this zone today, it's starting to look a little bit more, oops, like this potential sort of thing. If it can't continue this move down, so let's just emphasize this a bit. So it's moving down. You want to see it up and then down. But at the moment, what we're kind of seeing, if this holds, this turns into a sideways. Look, it doesn't mean that the game's over and okay, that's it, that's a base. But as I said, if we find that sort of like, buyers are holding this level, holding this level, holding this level, which they seem to be doing, 2970 kind of thing, they obviously tipped down into it just briefly and that, so quite a strong reaction from underneath there. What you want to see is that the buyers that are sort of at this level here, these buyers are no longer here. You want to see a depletion of buyers at this level. And basically, sort of, if we sort of have a look down, where else may they be? Well, we've got a little bit of a zone through here, around that sort of 20s area. This would be probably the next point of call, and this is, as we'll say, this kind of move would be the pattern that I'd be looking for on a move down. But what you want to see is big volume, big candle driving it through these levels. I want to see a depletion of buyers in this segment of the market that want to buy it at this level. I want to see them retreat back down to those 24 levels, and then they can have a little bit of a go there. Because obviously this is a resistance level, and it was a fairly significant little resistance at the time. We saw 4% correction off this level here. So they were trying to hold it, and this was the big breakout. This was like, at the time, we had little heads and shoulders, and oh my God, here we go. Maybe this is the top of it all tops. And no, bang, sort of shots of quite through. And this is, remember, this was just prior to sort of first time coming to 3,000. So, what you want to sort of see is that basically, the people that are sort of like shorted here, well, they got back out here. You want to see that, okay, market says, no, we're not really paying so much attention to this level. We're going to be looking lower, more likely a support where it has been support, opposed to, I mean, look, this has been support here, I suppose, so you could say there's your little range, but more recently, it's just been a resistance. So I do think you're going to get a reaction around, 2920. I don't think it's just going to carve straight through it if we get to it. I think you'll see a bit of a bounce here, but what you want to see then is that the people that sort of were happy to sell it down here, you want to see them flip and then hold that as a resistance. I mean, first things first, let's get through it. But should you see a depletion of the buyers here, let it go. Expect a bounce here. The people that were trying to hold this, trying to buy it, they're like, okay, no, that's it. I'm happy to get out. Called this one wrong. You get some right, you get some wrong. We got this one wrong. Let's let it get out, and that'll give you hopefully this second wave that'll sort of really sort of drive it down to that sort of sub 2900 target. So that's the price action in the flow that I'm sort of looking for with it all. If you stand back a little bit, yes, it's incredibly sort of messy. Let's get rid of some of these things because they're not. Oh, actually, no, let's keep that one on there. Let's get rid of some of these things. Go across over here. Let's see, where are we? That can go out. Excuse me. So what we've got here is the breakaway channel that was sort of like, found resistance on. Obviously tried to hold support. It's given way to this channel. Now, this isn't its main channel. Obviously, the main channel being these dotted lines here. So, it's not sort of like, oh my God, the whole trend's changed because this little channel's broken. But it is something that they were respecting. They were respecting, and even here they tried to hold it, and bang, they've broken through it. So I do think that needs to be respected a little bit in the sense of, okay, it's broken down. Most likely what you can be looking for now is a regaining of this larger, put it on the daily here, of this larger channel. in the sense of, overshot here, come back down, somewhere, into touching this sort of support. If it comes down quickly, obviously the lower it goes. If it drags out a little bit, bang, 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 and then sort of moving up over there. But I would still say that, as I said, I'm still playing the idea that we have a little bit of a downside. I think, the price hasn't really been sufficiently punished enough. But at least in the short term, you want to see a big candle here drive through and sort of close down underneath 54. I mean, look, it's 21 hours left on the daily candle. So lots of time. This thing could obviously just come down, do a double bottom, like here, 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 and then sort of move back up over there. So as I said, below 55 will be, I think it'll be a sort of nice little move down towards the 25 short-term targets. All right. Flip along, we've got silver, and silver, yeah, it has nicely come up and retested and rejected, and this is actually also sort of looking for its second wave down here. This is the yearly channel. Well, actually, channel, yeah, it is pretty much a channel, isn't it? Yeah, yearly sort of supports that we were working off. August 24. No, this is a different channel that I had marked up. Anyway, regardless, if we connect those lows, there's also January's there. Okay. This is the problem with working with about 5 charts. So this is very interesting. So this has actually stepped back out even another level than what I had been doing the analysis. So this is the chart that I had been working off, which is obviously our yearly support, gave way, bang, got absolutely hammered down. If we step back out another level, we can actually sort of take those lows from August and then connect them with, December, January's low, and that's also given way. This could get ugly, and this could see definitely another leg down. So I said yesterday that I could be seeing I could see sort of 27s coming into effect. What are we at now? 29, 40s. I think definitely. I think you could be looking at 27, 26. I think certainly should this thing break, and obviously close down underneath 29.50. So let's just put a little mark there. That's where you want to sort of see it for today. I think a close outside or below this direction, below this level, will sort of signal at least minimum you're going to fill that wick. But I would say an overshoot down to 27.70. That'd probably be an area that I wouldn't mind actually having a bit of a buy. Over here, 27.70 seems pretty good to me. I mean, you got to look at these things in the scheme of stuff. Like, it has absolutely wiped the hell out of everything here. It doesn't mean that necessarily we're going to see this thing straight back up over here, by no means. But I do think that sort of this could be setting for another wave down. So basically, that's what I traded overnight. The idea that sort of, things weren't going to recover in 2 seconds. And all those early positions, they kind of needed to be humbled a little bit because, I mean, as cliche as it is, they say, it's nothing's easy, it's no easy money. Well, that's how the market was trading it. I mean, they were some massive moves. They were 10% moves off the lows for the equities, for metals, these kind of things, like solid moves to the top side. Very, very rarely do you see V-shaped recoveries. And, people are like, we are at COVID levels of things in terms of the price action, how it's moving, the levels that we're hitting, all these sort of kind of things. And last time with the COVID, everyone's, oh, I missed the boat. And it was a V-shaped recovery. Those people need to be humbled in that because, it isn't just sort of like, hey, log on and just buy some stuff and, hey, look at me, I'm a trader. That's how they know how to take money. And this is a much different sort of situation. And it's going to take a little bit longer to sort of resolve. Obviously, we're seeing sort of this escalation of tit for tat sort of stuff with China. The 104% tariff or whatever I just saw before is coming into effect at 2 o'clock today, or 1 past 2 or something like this. So, it's hard to sort of see them sort of resolving this stuff straight away. China's in a position where a big thing with them is, they like to save face. They don't want to look weak and they don't want to look like, oh, we've just been told what to do. So they're not going to back down. Trump is a hard ass and that, and what I mean, love him or hate him in that he's doing what they asked him to do. He's going into it guns blazing and basically he's just sort of showing that sort of like, hey, you know what? I can be that squeaky wheel. I can be that sort of person that's not going to just sort of bend over and just sort of take it. And the market's going, oh, geez, well, how could you do this to us? But, look outside the 5 minutes of, the last couple of sessions, and you can see the things aren't really super as incredibly dire. I mean, have a look at this. I put this up the other day. That I mean, yes, ugly in that context, but, you know, where are we at here? So there's 2020. That's not even 2020 for some reason. It doesn't even it doesn't like to. It says anything beyond 2020 is too much. But regardless of all, 2020 is like sort of down here, 17K. You know what I mean? Like it's the market's still massive. Look, there's a huge drop, and I think it could go even a little bit further. But that's the time that I'm looking because I think sort of like this kind of move here, everyone's like, oh, yes, V shape, V shape. No, bang, rocket down again, then buy and buy the tiers, buy the second wave of tiers, in my opinion. But anyway, whatever. Back onto what we can do, some actionable sort of trades with it all. As I said, I think sort of like if you can get a close lower than sort of down towards 29 or so today, I think we could be looking a little bit lower, and I'll be looking around these 2740s, 2750s. And look, if you massively overshoot, then you're looking down to 2650. I think a lot of people would be loving to buy it down there, and you got to remember that you got the people that jumped in early here. That's sort of like, yeah, I bought it, I'm a trader. They'll also get liquidated or at least stopped out. Come down here, then you buy the second wave of tiers. That's what I'm looking to do. And if this thing rockets and moves back up like this, well, so be it. But I don't see these moves coming back up over here. Well, I just don't see them happening. But certainly don't see them happening without some sort of massive resolution with things. So, until that fundamentally changes, then, these technicals are going to sort of still play an effect. And this is an ugly sell-off. At best, you're going to consolidate down here for a bit. And then, I think any sort of bounce is just going to be sold into, just like we saw this one here yesterday. I mean, that was the plan from the weekend, was this sort of move down here. Early move down, bounce, which is what we got, up to over here. This was the trade, up into this level, and sell it. And that's what we did. We sort of sold it up around this level here, and then actually just closed out a little bit this morning, just to sort of like cover things, because this has actually been my best. I mean, it's only Wednesday morning. It's already been close to my best week. It's only 2 sessions in. So I mean, certainly, if you time these things right, that's where these are the conditions where we're going to really sort of see some insane returns. Obviously, it's just a transfer from account to account from other people, but this is the game that we play. All right, so as it is, look, short term in terms of 4 hour, we're breaking this support. It's moving down here a little bit. Let's see what happens when the volume comes in. Seeing gold sort of, trying to hold that 70s level a little bit as well. I think once one goes, the other one will go. But from a pure technical level, look just here. It does look like you probably want to fill this body. So 29.17. Where are we at now? So 29.50. So, it's at least 30 sort of points down here. Let's just see what happens when the volume sort of comes in. But you've got a little range at the top here with the bounce. It's actually held up pretty well because you can see they tried to get it down, bought up. Tried to get it down, bought up. And then obviously 3 taps onto this level is enough to sort of break it down here. So a 4-hour close outside this little box, I think should sort of almost sort of guarantee that we're going to see at least a wave down. Look for the body fill here. Look for the wick fill there. Take out the wicks. Then we're looking down into the 27s. I mean, you're pretty much already down into the 27s there, but, I could see at least another sort of wave down. I mean, I don't think this would be the play, but from a bounce, I don't think that's going to play out. But, no, well, I'll leave it on there. Probably freak some people out, but we'll see how we go. All right, and on to Aussie. So Aussie was another good short overnight. It was funny because I missed this rally up through here and sort of took little snippets of shorts and that sort of through it all. And I was shorting all up over here. And it was funny because, I was speaking to a mate and I was like, you know what? To me, Aussie had no business being up here. And he's like, what are you talking about, mate? It's so low. And I'm like, yeah, but you got to remember, I trade intra-session. You know what I mean? I don't trade like, yeah, it's incredibly low. It's at 5-year lows. But the point is, if you look at the three things that were happening, RBA is sort of calling for more cuts. You know, I don't think it's going to happen, but you know, they're calling 50 base point cuts. As I said, I don't think it's going to happen. But regardless of that, that is down. China just let the yuan go through the top. That is down. US, well, who really gives a shit about DXY at the moment? It's not really doing anything, so it's kind of almost a little bit neutral in that with it all. But certainly risk off kind of environment with it all. But what I was sort of saying to them is, look, up the top over here, you got copper on its knees. You got equity markets due for a correction. It wasn't at this stage. It was equity markets exploded north in that on open, then got hammered into. So I shorted the US 500 as well, the ES. I shorted Aussie, shorted silver, shorted gold. They all got absolutely hammered. It was a very good night. But point is, I was the sort of copper's on its knees. Equity markets are probably going to see another wave down, which is the whole sort of thesis of what I'm sort of saying at the moment. China situation hasn't been resolved. Why is that a situation where you're like, oh, let's buy risk. Let's buy Aussie, which is basically a risk asset. Let's buy it. Let's see what happens there. Like, you know what I mean? There was no reason for Aussie to have jumped 1.5% or whatever it did off the lows yesterday. And look, it proved correct. It definitely proved correct, and we got absolutely sort of smashed from the highs. And we saw it come down 2.4%. These are some big sell downs here. It equally met with some big buy ups. So, you know what I mean? Some long term positions, I think, are great buys here. It could definitely go lower though. That's the thing. Like, this is a sort of like, it's trying to hold here. So these sort of levels, and this is what I was saying with gold as well. So, you want to see bang, down, up, and then you want to see continuation. That's how you're going to see things lower, obviously, sort of, lower low. What we're sort of seeing with Aussie is, it's trying to hold. It's trying to sort of say, hey, look, you know what? This is 60 cents, big psychological number. Things aren't maybe that bad. Maybe you can recover a little bit more. Great, whatever. But the point is, this can still go this way. And even if it goes up this way, I think it's going to get sold into. So I think that's your kind of course of action there. So to me, this isn't quite necessarily, hey, let's buy it. There's long-term buys that are great here right now. Um, but I do think that the market's sort of thinking about it here. Are we going to get a resolution? Are we going to see something work out? Have we found the bottom? I think this could probably dip down to 58s, to be honest. And that I think this is just a stall and then maybe down lower. Look, I've seen sort of calls down at 55. And, just as fun as that last one was there, that's 57 at least down here. Taken from that first bounce, I mean, you could say from this range high here, which obviously would sort of push you a little bit lower down towards 56 into the 56s. But I think conservatively from that sort of high over here, we saw market seller down. Excuse me. Sellers have obviously reduced. A close underneath 59 or towards 59 cents today, I think we'll say, okay, this is done here. And even if we just sort of called this a little bit of a range, clean this chart up in 2 seconds. If we called this a little bit of a range, your measured move off this would take you back down towards those 58. So I think sort of certainly today, let's get rid of some of this stuff. I think today's going to be sort of pretty crucial. I think sort of, as I said, we could be looking for another wave down and stuff. It certainly looks like it wants to cake out the bottoms here. It had a little bounce for a split second, and then it just gave that up again straight away. So look, I would say this is probably looking to push down underneath the bottom here. We are looking like it is testing out the lows. But yeah, I think sort of 58.20 is probably an area. You might see this dribble, and then bang, move down here, particularly if we do see gold sort of come off. That might sort of obviously sort of see it. sort of push a bit lower as well. But I think, look, medium term, you probably got some decent buys here. But you got to understand that medium term is exactly that. Medium term, it's not sort of returns tomorrow. So, you could be buying here now and then, maybe 2 months or so, we're back up at 62, 63 cents. Could definitely happen. That gives plenty of time for resolutions of stuff, but you've got to be able to take a little bit of a swing drawdown. So obviously smaller positions, and yeah, then just be prepared to stomach a little bit of a period of sort of being lower, having it sort of drift a little bit lower. Look, top side to this, it's like, yeah, again, just all things considered. Close at 61, be looking at maybe 62, 61.90. That's just all things considered, but I would say that's your kind of direction here. Get a resolution. Okay, you know what? Actually, I'll just sort of preface that one. So get a resolution. That's what you could see. But again, I think this will be sold into. Should you come back up over here? All right, let's flip along. We've got copper. So this is the play I sort of call with copper. Also, sort of like, I mean, it's just really in this box. If it gets down to if it goes up, you sell it down. If it goes down, you buy it up. This is the kind of thing that could keep Aussie a little bit sort of balanced, maybe not completely dying. Should this hold this zone here? We're actually at a massive confluence with copper at the moment. So if you step right back out, so this is the sort of support that we had sort of going back starting from July 22. It actually sort of acted very good because this is the one that gave us that break and also retest to see the big explosion last year. It's bounced here. We had confluence of this large support, top side of this more recent falling support from those at the time all-time highs, and also this horizontal. So that was a very strong sort of confluence here. And as you can see, market, well, you can't really see it on this one here, but market agreed, and it has held this zone very well. So look, if this breaks below sort of 4, then it's going to be looking pretty dicey for it, I'd have to admit. But for the time being, it looks like it wants to sort of maybe hold this low side. I think any sort of push up, again, I just don't see this breaking back north till we get some sort of resolution. So, what I mean, again, this is pretty much the box to sort of play in. Buy the bottoms, sell the tops, and just sort of see what happens with that. Oh, Aussie's just breaking a little bit lower now as well. All right. So rock along DXY. So this is the idea with DXY that we would see this sort of like, after price target hit, move up towards this area over here to try and sort of close the gap that it kind of had. It's back into retesting the underside of this support. Markets obviously said 1, 2 taps, bang, and actually had a pretty weak day yesterday, which is what sort of helped spur Aussie on a little bit as well. And this is the thing that sort of means that, potentially Aussie won't get absolutely fully destroyed. I mean, it's on its knees. It has already been destroyed. But the thing is, overall, we'll probably see a weaker US dollar. So it doesn't mean necessarily that Aussie's going to be sort of going back to 64, 65 cents. It certainly doesn't mean that. You need other things. You need copper, you need equities, you need China. Those things to sort of come back on board along with US dollar constantly weakening across the board to sort of see Aussie dollar sort of kicking back up. But the fact that ultimately I think they want to sort of sell this thing down and get this thing a little bit weaker and potentially break through 101 means that you might sort of see little bursts of Aussie strength. Just in the fact of, not necessarily because, everyone's like, hey, look, Aussie's a great buy, but more so that they're just selling US dollar across the board. They want yields down, which yields are spiking, so obviously it's getting a little bit of a whack at the moment. So it's pushing US dollar up a little bit, but ultimately they want to get it lower. So, which I do believe they will make happen one way or another. So I think that that'll sort of give little bursts of Aussie strength along the way. But certainly for the moment, Aussie is breaking low. It's actually testing those wick lows from Monday's open. Completed the wick there. So let's just see how this goes. Anyway, look, back to DXY. What we're sort of seeing here is really just sort of consolidating up around the top over here. I could see this do another little burst up here, but should this, because as you got a nice little baseline here where buyers are holding, buyers are holding. I could see this maybe put a big burst up here and then sold into quickly and then move down here. This will get your Aussie down to sort of like, as I said, those lower targets, and then potentially see this sort of play out for a bit more of this range. I don't see people sort of going, hey, look, let's buy US dollar crazy, given everything that's sort of going on at the moment. I think potentially you could see just a fake up rally, move up over here, close the gap, suck in a few people, stop out any early positions, and then sort of start to move back down and see this thing weaken a little bit further. But in the sort of short to medium term, probably looking back for a test back towards 102, certainly before we go above 104.20, that kind of thing. So yeah, we'll see how we go with it all. A little bit of a gap down this morning. It's a very choppy chart, so it's very hard to sort of pick some nice even levels along here. But yeah, that's what I'd probably be looking for, a little bit of short-term rally, and then sort of sold into. All right, and finally, just on the Yuan, and they finally kind of let this thing go, and it has cruised to the top here. So if you take it right back here, where are we looking at? That high as it's been, possibly. You can start to look at where may this, from a technical standpoint, go. Up over there. Not a big fan of this. I don't really think it's a wedge. I don't like that this has originated elsewhere and then that this didn't originate from the lows. But it does mean that should they sort of decide to move it up here, 750, it could be a sort of a level where you see at least the market sort of like participants and that try to sort of sell this thing into a little bit. But let's get back onto a lower time frame. Certainly they let it go. This is the intervention intervention level that we've seen held a number of times. Way back from October 22. More recently, January. Was it just January this year? It was very recent. I was obviously looking for a break of this level to come back down over to test this sort of like rising support over here. Situation's changed. This whole sort of trade war thing, it's really sort of, it's going tit for tat with it all, and they don't want to escalate things. I think they just don't want to sort of look like the little bitches in the situation. So they haven't sort of done a mass devaluation of the yuan. I think the thought is, from what I've seen, that should they do that, you'll see a mass exodus from China in terms of capital. And should that happen, obviously it's not going to be great for the Chinese economy. So they want to avoid that. So, they've let it go a little bit. It's gone up here. It's broken through this about 1% or so. Look, about 1% above, which, is okay, percent. It's always a decent move in a currency, particularly in one session. But, in terms of sort of what the yuan typically moves, because it's such a managed thing, this is a very controlled move here. This didn't go bang, 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 and then fly up. Because remember, if this was any other sort of currency or thing with such a strong resistance here, you would have seen it just bang. We saw what happened with gold-silver ratio after 3 months of consolidation. That flew out. So, had this sort of like just been a purely sort of trader-based move, you probably would have seen this thing a lot higher, I reckon. So it's broken out, it's being sold into, it's being managed, it's just sitting out here. It's showing the sort of the idea that, look, we can do this as a sort of, somewhat peaceful way of retaliating to these sort of tariff situations and threats to show that sort of, look, what I mean, we can actually sort of weaken our currency. We're not going to fight you, like sort of physically fight you, but this is how we can sort of curb things a little bit. But we'll see what happens. What I mean, there's a lot of these things sometimes sort of come out at the sort of last second, and they sort of have some sort of resolution. I think I mean, just to sort of weigh in for 2 seconds, I think it was probably a little bit sort of short term to sort of say, hey, look, if you don't take the tariffs off tomorrow, then we're going to do 100%. You know, it's like, you know, you've got to give some sort of reasonable length of time, but at the same time, it's sort of like, Trump's doing exactly what he said he was going to do. So, there's no sort of shock to it all. I think those first couple of tariffs that sort of came out with Mexico and Canada, and then they were coming out, and then they pulled back, and then they were coming out, and then they pulled back. I think that sort of got the market in this false sense of like, nah, he's just playing. And now he's come out and it's just not even just sort of hit them with the bazooka, it's just blown them away with the sort of I suppose bazooka's bigger than the cannon, isn't it? But anyway, he's just absolutely blown the markets and everything away, and he's sticking to his word. So I think it's kind of like you got two stubborn sets of people who are just both trying to sort of go, well, you know what, you want to play ball, this is what we do. And the Chinese are just going, okay, fine, we'll play, but we'll play only by our terms. So look, it's a bit of a stalemate, and I don't think this is going to be resolved overnight. So I'm not looking to sort of be buying risk quite yet. Hence, I think we could see a continuation of another move down. But once that move's played out, once you burnt those early positions, then I think we could look for some sort of more medium-term resolution. That's just my plan of attack. All right, so where we at? Look, I don't imagine too much to be happening with this in terms of this. Maybe a back test over here, but again, I think this is just purely just sort of showing him, hey, look, we could do this should we want to do it. But yeah, it's not really so much actionable stuff in this. Back down into this range. Okay, maybe that's a tester, and like it's just like, hey, look, see, we can do it. Move back down over here, but I don't think there's anything overly actionable with this chart at the moment. All right, and finally onto some actual data. If we do have, it's been pretty quiet. It's quiet overnight and yesterday. I think it's still pretty quiet. We've got the cash rate coming out for New Zealand. All this news at the moment just feels absolutely buried, sort of beneath like all the sort of tariff stuff. It all takes such a big sort of backseat to it all. But where are we at? We got so New Zealand cash rate down 25 basis point. Yeah, not really sort of that interested with it all. Um, Typically, what we have seen more recently is actually an inverse move from what you'd typically think would happen with this. So a lot of this sort of buy the rumor, sell the news kind of stuff. So should this happen, I'll watch what happens with it all just to see if that theme is continuing with the other currencies, but yeah, not too interested about New Zealand. You got Ueda, he's talking at 4 o'clock. As I said, not that it's on here, wedged in here at 2 o'clock, of course, is when those tariffs come into effect. So you might see some movement and action around that time. Bit of China data. Okay, this is over a couple of days over the week, from today through till whenever, Saturday. And that's about it. And then sort of, you got Fed minutes, 4 a.m. But all this sort of stuff kind of seems almost not irrelevant, but, you got to remember that this stuff is still, the world's still ticking on and all this stuff's still happening outside just the tariffs. The tariffs are obviously the big driver, and that's what's sort of giving us the volatility. But at the same time, sort of, you've got to remember this stuff is coming at some stage. One quick one, just recapping yesterday, actually, we had that Aussie data out, the stuff here, and this is what I was saying yesterday. There was no shock with this, that the sentiment and the confidence were going to be down. I don't know how more recently these numbers were sort of taken, but certainly it's Ooh, Aussie's just breaking the lows there as well. There was no sort of shock that this is down, and obviously yet another tick just to weigh on a little bit of a weaker Aussie dollar there. Cool. All right, that's it from me.